Hey, what's up you guys? Welcome to another video. So today we have a very interesting topic, which is dividend investment. I am going to explain how my money was working while I was sleeping and how I made more than $180. Stick here until the end where I show you how I made that much money and how you can make it too. Before we continue, make sure to smash the like button, subscribe, hit the notification bell so you can be the first one to be notified when I get another video online. A dividend is a payment that us shareholders receive from the earnings of a company. When a company is profitable, the people that run that company can choose to use those earnings to help grow the business, or they can choose to give some of those earnings to the investors in the form of dividends. This is why we have growth stocks and dividend stocks. The people who run the growth stocks use the earnings to do more research and development in order to create new products and services that will make the company grow faster. At the end, this growth will be reflected on the price of the stock. Take for example Amazon, who has gone from $80 in 2008 to more than $2,300 today. On the other hand, people who run dividend-paying companies focus on paying their shareholders a certain percent of the earnings in the form of cash. Typically, these companies have stable and strong cash flow. These payment percentages and the time at which they are paid varies from company to company. There are some companies that pay dividends every month, others that pay dividends every quarter, others that pay dividends every year. Take for example AT&T. They pay a dividend every quarter. Last quarter, AT&T reported that they were going to pay 52 cents per share. This means that if you had 100 shares of AT&T, they were going to pay you $52 in dividend. One thing to remember is that companies are not obligated to pay a dividend. So if things get difficult, such what just happened to the airlines and cruise lines, they can reduce or suspend their dividends in order to preserve cash and survive unexpected situations. All right guys, so now let's dig deeper into the world of dividends. There are two types of dividends, qualified and non-qualified. A dividend is typically qualified if you have held to the stock for a certain amount of time. The IRS conveys the same message using the following words. A dividend is qualified if you have held the stock for 60 days during the 121-day period that begins 60 days before the ex-dividend date. In other words, just buy and hold it for a while. Alright guys, so now let's unlock the secrets of the rich and why they love to invest in dividend-paying companies. So the reason they love this, besides getting paid, is a 5-letter words that we see every year. And if you guess taxes, you're right. A qualified dividend is taxed at the capital gain tax rate, while ordinary dividends are taxed at the standard federal income tax rate. Yeah, I know. All those words are confusing, but I'm gonna make it easier for you to understand. If you have qualified dividends and you're a single filer, your brackets will be as follows. If you make between $0 and $39,375, you pay 0 taxes. If you make between $39,376 and $434,551, you would only pay 15% taxes on that money. And if you make more than $434,551, you will only pay 20% of taxes. Now, if you're a joint filer and you have qualified dividends, your tax bracket will be as follows. If you make between $0 and $78,750, you're gonna pay 0% taxes in your dividend. If you make between $78,750 and $488,850, you will pay 15% taxes. If you make more than $488,850, you will only have to pay 20% tax. This means that no matter how much you make in dividends, the most they can tax you for your qualified dividends is 20%. Now, if you have ordinary dividends, they will tax it at your regular tax rate, the same tax rate that they use to tax your W-2 or your job. So the maximum they can do for ordinary dividends is gonna be at 37%. Also, it is important to know that simply buying the stock the day that it will pay dividend does not mean that you will receive the dividend. In order to receive the dividends, you must be a shareholder or own the stock on the record date, which is the date in which they will sort of take attendance of the people who own the stock. For this purpose, we have what is called the X date. This is the date by which you have to have the stock in your portfolio, which means if you buy the stock after the X date, you will not receive the dividend payment for that specific quarter. However, if you keep the stocks, you will be eligible to receive it in future quarters. When it comes to your dividend payments, they will usually deposit them in your account to which you can withdraw it, reinvest it in other stocks, or use a DRIP. A DRIP is a dividend reinvestment plan which automatically handles how to reinvest your dividends. With a DRIP, the money is automatically used to purchase more shares. This allows shareholders to accumulate more shares, which lead them to have more dividends and a higher share growth. This will give the shareholder a bigger return at the end. In order to find out if a stock pays dividends, you can look at the stats of the specific stock and find the yield. If the yield is empty, the stock does not pay dividends. The dividend yield is how much return you will get according to the price of the stock over a year. In some instances, you will see very high yielding stocks. Those are not always safe, as they may be giving too much money out, and that big amount of money may not be sustainable for a long period of time. Talking about a long time, there's a group of dividend stocks called the dividend aristocrats. These are dividend stocks in the S&P 500 that have paid and increased its base dividend every year for at least 25 consecutive years. In this list of stocks, we can find stocks that have paid dividends for more than half a century, such as 3M, Colgate, Coke, Emerson Electric, Johnson & Johnson, just to mention a few. Since we were already talking about stocks, if you want to get some free stocks, make sure to sign up for WeBull, which gives you 2 free stocks valued between $12 and $1,400, link down below. In addition, if you haven't done it, make sure to join Robinhood with my referral link down below, and we both will receive a free stock. So now that I have explained what dividends are, let's get into how much I got paid this month in dividends and which stocks paid me. So the first stock that paid me was Verizon. I have 5 shares of Verizon and they paid me 61 cents per share for a total of $3.08. The second stock that paid me was AT&T. I used to own 301 shares and each of those paid me 52 cents for a total of $156.52. So the third stock that paid me this month was Apple. I own 30 shares of Apple and they paid me 82 cents per share for a total of $24.60. The final stock that paid me this month was AbbVie. I just have 1 share of AbbVie and paid me $1.18. All of this for a total of $185.35. I think that's great in comparison to my savings account, which paid me 42 cents in May. And like I always say, this is just my opinion and I am just a guy sharing his investing experience here on YouTube. If you are investing in dividend stocks, comment down below, tell me how much you made from dividend stock this month. Also remember to like, subscribe, hit the notification bell to be notified when I upload my next video. Once again, see you next time.